Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Hamilton Lane Incorporated quarterly report. Hamilton Lane Incorporated offers a diverse range of businesses and services that cater to various investment strategies. The company specializes in private equity and venture capital investments, focusing on early-stage ventures, emerging growth companies, turnarounds, middle market, mature, mid-venture, bridge, buyout, distress/vulture, loan, mezzanine, and growth capital companies. The firm's services include direct credit, direct investment, fund-of-fund, evergreen, and real assets investments. Specifically, it invests in primary and secondary fund-of-fund investments, targeting private equity, buyout, special situations, credit, growth equity, middle market, mature, turnarounds, mezzanine, and venture capital funds. Hamilton Lane Incorporated also has a focus on investing in innovative companies with disruptive technologies across various sectors. These include space, engine, alternative energy resources, environmental and facilities services, households durables, leisure products, textiles, manufacturing services, water purification, online training service, healthcare services and technology, energy, industrials, commercial services, internet software and services, consumer discretionary, healthcare, real estate, information technology, tech-enabled businesses, financials, utilities, and consumer services. Geographically, the company invests in companies based in Africa/Middle East, Asia/Pacific, Europe, Southeast Asia, Korea, China, India, Latin America, and Caribbean, United States of America, New York, Florida, Arizona, Nevada, New Mexico, Oregon, Washington, California, and surrounding states, Australia, Japan, Brazil, United Kingdom, and Canada. In terms of investment size, Hamilton Lane Incorporated typically invests between $0.25 million and $100 million in companies with small to mid-sized enterprise values. The firm often takes a majority stake in the companies it invests in. The stock price of Hamilton Lane Inc. has dropped by over 18.81% in the past year, with a significant decline from its 52-week high of $173.468 on April 16, 2025, to a low of $114.466 by November 3, 2025. This sustained drop is not attributed to any single catastrophic news event, but rather a market reassessment of the company's valuation. The key factor contributing to this decline is the market's perception that Hamilton Lane was overvalued. As of November 14, 2025, the company's valuation grade shifted from very expensive to expensive, with high valuation ratios compared to industry peers. This led to a correction in the stock price as investors reassessed its value. Additionally, the mixed sentiment in the private equity market during this period may have also contributed to the decline. While there was a slowdown in Q2 2025 due to tariff turmoil and economic uncertainties, the latter half of 2025 saw an improvement in global and activity and growing confidence in private markets. However, the focus on liquidity solutions due to slower exits and a need for returns on investment may have also influenced investor sentiment. Despite these factors, Hamilton Lane reported strong financial results for its fourth fiscal quarter and full fiscal year 2025, with management and advisory fees growing by 14% and assets under management growing by 11% year-over-year. More recent earnings reports showed positive results and rising stock prices, indicating a recovery in the later part of the year. Hamilton Lane Incorporated market capitalization of $8 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Hamilton Lane Incorporated holds a significant advantage in their industry. Hamilton Lane Incorporated trades at a higher price-to-earnings ratio of 25 times and a higher price-to-book ratio of 8.25 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 45% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. On the growth side, management and advisory fees have seen a significant increase of $153,177,000 in 2025, driven by the success of specialized funds and customized separate accounts. The strategic partnership with the Guardian Life Insurance Company of America has also contributed to revenue growth, generating approximately $500 million per year in private equity investments. In addition, the sale of Consolidated Fund brought in a substantial amount of cash, totaling $92.3 million. Reporting, monitoring, data, and analytics revenue have also seen an increase of $2.2 million. On the other hand, revenue decline is attributed to various factors, such as customized separate accounts, experiencing a decrease in contractual rates over time, and lower net invested capital balances. Specialized funds have also faced a reduction in management fees after investment periods, discounted management fees for early commitments or investors in other funds, and retroactive fees for late commitments. Advisory report and data management fees have decreased by $871,000, while distribution management fund reimbursement revenue has seen a decrease of $122,000. The retroactive fees from the latest secondary fund have also contributed to revenue decline, decreasing by $20.7 million. Net income and profit margins experienced changes in Q3 2025 and YTD 2025. The company's net income has seen an increase in both Q3 2025 and YTD 2025. In Q3 2025, the net income rose to $92,797,000 from $77,455,000 in Q3 2024. Similarly, for the year-to-date YTD period of 2025, the net income reached $273,471,000 compared to $240,463,000 in YTD 2024. However, a closer look at the profit margins reveals mixed results. The net income margin, which is calculated by dividing net income by total revenues, decreased slightly in Q3 2025 to 46.8% from 45.9% in 2024. On the other hand, the YTD 2025 net income margin improved to 48.3% from 46.7% in 2024. The increase in net income can be attributed to higher comprehensive income attributable to Hamilton Lane Incorporated. Meanwhile, the improvement in profit margins is due to higher performance fees resulting from increased net profits. However, this positive trend was affected by clawback provisions on incentive fees. The company's financial performance indicates a strong ability to generate cash from its core operations. A key indicator of this is the positive operating cash flow, which measures the amount of cash generated from the company's daily business activities. According to the provided data, for the 9 months ended December 31, 2025, the company reported an operating cash flow of $321,944. This significant figure demonstrates that the company is successfully converting its profits into cash, allowing it to fund its operations and invest in growth initiatives without relying on external financing. The positive operating cash flow also suggests that the company's management has effectively optimized its business processes, reducing costs and improving efficiency. Overall, this financial metric provides a clear indication of the company's ability to sustain itself and drive long-term success. The company's debt level and interest expenses have undergone significant changes over the past year. Initially, there was a decrease in debt from $290,303 in March 2025 to $279,515 in December 2025. However, this trend is contradicted by another report that shows an increase in debt from $281,875 in December 2024 to $293,125 in December 2025. The issuance of senior notes worth $100 million on October 8, 2024, also contributed to the overall increase in debt. Furthermore, a comparison between March and December 2025 reveals a decrease in debt from $293.1 million to $281.9 million. In terms of interest expenses, there was a notable decrease of $218,000 in 2025 compared to 2024. Another report confirms this trend, stating that interest expenses decreased by $178,000 in 2025 compared to the previous year. These changes suggest that while debt levels may have fluctuated, interest expenses have consistently decreased over the past year. Management is optimistic about the company's outlook, citing increases in revenue from various segments. The company's strategy includes expanding business through customized separate accounts, specialized funds, advisory services, and distribution management. With $98.1 billion of assets under management, AUM, in customized separate accounts, $48 billion of AUM in specialized funds, and $871.5 billion of assets under advisement, AUA, the company is well positioned to continue its growth. The company's strong market position and increasing demand for alternative investment solutions are expected to drive revenue growth. Management is investing in technology and expects it to have a positive impact on the business. The company is also evaluating opportunities for capital markets access and strategic investments, while continuing to repurchase shares under the stock repurchase program. Management is focused on growth, prioritizing liquidity needs, maintaining regulatory compliance, and continuing to pay quarterly dividends at the discretion of the board of directors. With a leading position in providing private market solutions for U.S. labor union pension plans, the company's outlook remains positive due to an increase in gross subscriptions to evergreen funds. The company has a history of paying dividends to its shareholders. This is evident from the financial statements provided, which show that dividends have been declared and paid out in both 2025 and 2024. The exact amounts are specified for each year, with $0.54 per share declared in 2025 and $0.49 per share declared in 2024. Additionally, the company has confirmed on page 79 that it does pay dividends, although the specific amount is not disclosed. The payment of dividends suggests that the company is generating sufficient profits to distribute a portion of its earnings to shareholders. This can be seen as a positive sign for investors, indicating that the company is committed to returning value to its stakeholders. Concerns about inventory buildup and supply chain disruption. There are growing concerns regarding the potential for liquidity issues and delays in accessing funds. This may be linked to supply chain disruptions, which can have far-reaching consequences for businesses. Furthermore, an analysis of financial data reveals a significant increase in investments and other assets from December 31, 2025 to March 31, 2025. This buildup of inventory could indicate a potential bottleneck in the supply chain, leading to delays and increased costs for companies. The combination of these factors raises serious concerns about the resilience of businesses and their ability to adapt to changing market conditions. That concludes the financial summary for Hamilton Lane Incorporated. Feel free to comment below, and I will be happy to answer them when possible.